Are you a real estate investor who develops residential properties? In this video, I'm going to explain the typical hard money lending guidelines for ground-up construction loans, the requirements, the typical pricing, and how to find direct private construction lenders. I'm Rocky Batani, CEO of PrivateLenderLink.com, where investors and brokers can easily find direct, private, hard money lending companies throughout the United States. If you're in the investment real estate business and want to gain insights into private mortgage lending, subscribe to our channel and get notified every time we release a new video. Before 2020, a small percentage of hard money lenders offered ground-up construction financing because it is so much riskier than a rehab or a bridge loan. But starting in late 2020, construction loans became more mainstream in the private lending industry for single-family homes, townhomes, and small multifamily properties in urban and suburban areas. The exit strategy can be to sell the property upon completion or rent it and refinance with a long-term rental loan. No private lender will offer a construction loan for someone who is planning to occupy the home as their primary residence or second home. Private and hard money lending is only for investment purposes, and it's only for experienced investors. Experience is the first requirement for getting private construction financing. Most hard money lenders require you to have completed 1 to 3 projects in the past 2 years. Rehab experience typically won't qualify because ground up is so much more complex. If you've never developed a property or managed a construction project from start to finish, it will be difficult to get financing from a private hard money lender. However, there are a couple of strategies you can use to compensate for the lack of experience, and I'll make a separate video to cover that topic in detail. Next, let's talk about leverage. Once the project is shovel-ready, most hard money lenders will max out at 75% of the costs, and some will go up to 85%. So you will need to contribute 15 to 25% of the total project costs in cash. Very few lenders will consider using the land equity instead of cash, but it may be possible. And if you own another investment property which is already built, a lender may be able to take a first or second on that property as collateral instead of cash. Even if you use another property as collateral, you will still need to have some cash reserves in case the project goes over budget or the exit takes longer than expected. What if the project is not yet shovel ready? Well, then you're still in the land development stage, and the majority of private lenders want nothing to do with that. As I mentioned earlier, more and more lenders are becoming comfortable with construction projects, and some of them will consider the land development, but only if they are also funding the vertical construction. If you do find a lender that will fund the land purchase, the leverage depends on which phase of the development you're in. For a project that has entitlements but no building permits, the maximum LTV is 50%, so you'll need to contribute 50% of the purchase price in cash. If the project is approved and you have building permits in hand, a lender may go up to 65% LTV. And by the way, the maximum loan to value is the same thing as loan to purchase price. Lenders don't care if you think the land is worth more than what you're buying it for. To a lender, the purchase price is the value. In order for a lender to consider including land in the financing, it must have entitlements. If the project is not entitled, you will likely have to find a different private or hard money lender that is comfortable with funding bridge loans secured by unentitled land. And you'll still need to contribute at least 50% of the purchase price in cash. So what is the typical pricing for ground-up construction financing? Prior to 2020, most private lenders were in the range of 10 to 13% plus 2 to 4 points in origination fees. However, at the time of this recording in May 2021, I'm seeing lenders advertising rates as low as 8% plus 2 points for shovel-ready construction projects. If your project includes any land development, you likely won't get the lowest pricing. The recent drop in pricing for construction loans has been fueled by low interest rates, which cause a huge demand for new homes, and now there's a lot of capital in the market available that is attracted to the new home building sector. When the housing market cools off, maybe we'll see interest rates for private construction loans go back up above 10%, or maybe not. In addition to interest and origination fees, you'll have to pay for closing costs and inspection fees. Throughout the project, the lender will need to frequently visit the job site to confirm that each phase has been completed. Most lenders hire a third-party service for this, but if the job site is within driving distance to their office, they will likely send someone from their company to do the inspections. I've seen some lenders that waive the inspection fees when they do it themselves. Another item to consider along with pricing is whether you have to pay interest on the entire loan amount or only on the funds drawn. These days, it seems to be about 50-50 with half the lenders in our network only charging interest on the dispersed funds. For many lenders, this is not possible due to their capital structure and/or licensing. For example, lenders in California that lend under their Department of Real Estate license are required to put the entire construction budget in a third-party escrow account, so they can't use the money for other lending activities during the loan term. Therefore, they have to charge interest on the entire loan amount. This is also known as Dutch interest, and I'll make a separate video to cover this topic in detail. If you're looking for a private or hard money lender for a ground-up construction project, use our website privatelenderlink.com as a resource. There's no fee to search and no registration required. From the loan type list, select residential ground-up construction and enter a state or major metro area. Browse the list and use the filters if needed. Click on each lender's profile to learn about their guidelines, rates, fees, and much more. The interest rates and other guidelines at the top of the lender's page will likely apply to several different loan programs, so scroll down the page to learn about the construction loan criteria. Some lenders have a loan programs page with additional details about their ground-up construction program. When you're ready, you can reach out to each lender by submitting a loan form or a simple email form, or you can call the lender to discuss your loan request. If you found the content in this video to be useful, please click the like button, and be sure to check out our other videos about private and hard money lending. Thank you for watching, and see you in the next video.